Today, we're joined by Osman Ghandour, CEO of Soal Labs, a data and AI consultancy focused on private equity and private credit. In a world where investment teams drown in sims and spend weeks wrangling portfolio KPIs, Osman builds systems that give them one source of truth and 50% more deal capacity without hiring additional people. Today, we'll unpack how he does it, why AI only works when it's deeply embedded into workflows, and the biggest myths firms still believe about automation. Osman, welcome to Just Curious.
Thanks so much, Stuart, for having me.
Who is Osman Ghandour? What is Soal Labs, and what problems are you looking to solve?
So I think I'll start with the firm, then I'll go to myself. Like you mentioned, we're a team of data and AI experts exclusively focused on private equity and private credit. We provide advisory and consulting services for people who maybe don't have a great idea of what they want to do, all the way through to road mapping and execution of building bespoke solutions, as well as implementing the best-in-class software that's on the market. Me personally, I come from a very data heavy background. I started my career modeling and optimizing large scale operational facilities used by UPS, Amazon, so on and so forth. And I've also experienced an IPO along the way. And so that's what brings me here.
Great. What sparked your transition from logistics and some of your other experiences into the intersection of private equity and AI?
I think so. I went from supply chain and logistics through a couple of different areas, and I found myself to a pure data environment. So building tooling for you know analytics engineers and data teams. And from there, we noticed a few peculiarities with finance and specifically with private equity and private credit. One is that this is the decision-making business, and so the speed at which you can make those decisions and the amount of data and how you use that data to inform those decisions are extremely important, and the value of it is so much higher in the space. And so that was a few years ago at this point, and from then on, I kind of dove into this niche.
And you mentioned some of the dynamics within private equity and private credit. What's unique about their challenges when it comes to data and AI, and how do they differ between private equity and private credit, if they do?
Absolutely. So I think the big differentiator is how involved a private capital firm gets with their portfolio companies. So with credit, there's going to be much less involvement. So there's a lot more focus on firm level operations, and the analyses are much more quantitative rather than qualitative. They're seeing a ton of deals. They have a bunch of different factors that they need to incorporate, and they're more focused on how their firm uses AI as a private credit firm. Whereas on the equity side, you have some firms that are very deeply involved with their portfolio companies, and so they care more about portfolio level transformation because they may not see a ton of deals at the firm level, but the deals that they do consider, they go very deep on. So that's how I would split the two. It's like one is a little bit more involved with their portfolio, whereas the other has a lot more activity at the firm level.
You've mentioned a major expertise gap in this space. What kind of gap are we talking about? Is it strategy? Is it execution? Is it something else? Where is that sort of separation?
I think it's bridging the gap between what people hear in the technology space and how these teams can actually be saving a ton of time, finding better opportunities, raising more money, so on and so forth. It's going from idea to execution. People have a tough time translating that in terms of one, how do we use the latest technology that's out there? How do we actually practically implement it into the workflows of our teams? And how is it going to sit and fit with all the other systems that we have? So it's going from idea to execution. That's really what I mean there.
Yeah, let's talk a little bit about your ideal customer. Can you paint a picture of the types of organizations you're working with, and what's keeping them up at night when it comes to AI?
So middle market private equity and credit firms is our sweet spot. The very important distinction here is we love working with people, and we people love working with us the most if they're forward looking when it comes to technology, right? If they're not really forward looking when it comes to technology, they're probably not being kept at night by anything that's data related. And so that's kind of the segment of people that we love to work with because They're hearing a bunch of things. They know that they're going to be falling behind, but they going from that idea and the intention to execution is where we come in.
What does forward looking look like? Like, what is some
Great
like
question.
examples of forward looking behavior that people that either signals that they're ready to work with you or that people should be looking to invest into so that they are ready to do real transformation?
So at the fund level, for me, a very easy indicator that's obviously not final is, do they have a role or a function? It could be a CTO function, could be a director of technology function, could be a head of operations internally. Do they have a function that thinks about these things day to day? Or are you just relying on deal teams to, do this on the side while they do their everyday business? So for the firms that are forward looking, they have assigned a role or they have a internal technology or operational focus that you can actually find a point person for. So that for me is the biggest indicator from the outside. From the inside, sorry, from the inside, are these people actually playing with these tools day to day, or at least at a surface level, just to show that they're actually curious to explore how things work, not just like bouncing ideas around their head?
What are the most common bottlenecks you see in diligence or reporting, and why do they persist in such high stakes environments?
So let's talk about diligence first. I think there are a few different very big areas within diligence. There's the extraction of information from documents. So it could be SIMs, could be financial statements. Then there's the creation of documents, right? Could be creating different deal memos at each stage in the due diligence or underwriting process. Then there's the modeling part, where you have a lot of analysts and associates, manually putting together deal models that can, honestly take up a lot of time necessarily. Those are the big bottlenecks on the diligence side. On the reporting side, you oftentimes lack a single source of truth for your data. And what that means is you have systems that have the same data, but that data is not consolidated, centralized, recorded in one place. It's in a bunch of different places. Uh, Two, reporting every quarter or every month or every year, depending on what level you're looking at, is done in not an ad hoc way, but is not systematized. It's someone using their knowledge in their head, playing with an Excel file, right? That's not something that is automated. It's not something that's scalable, and it will cause issues with your data and eventually with your decision making down the line.
Jeff, um, from your vantage point, and you must be speaking with many funds, how's the conversation around AI shifted over the last year and even over the last like 6 months?
I think clearly there's much more excitement in the space over the past year. I think the really encouraging thing is that the big mega funds, the Blackstones of the world, the Carlyles of the world, these guys have started to be more public about what they're doing in the space, and that has gotten the middle market community paying much more attention to this. So I think we're starting to see middle market funds try to, and sometimes succeed, sometimes fail in implementing AI into their workflows. It's results are starting to show preliminarily, and people are starting to recognize that like hype isn't going to get them there, that they need real expertise as well.
Organizations like Blackstone, Apollo, Carlisle, et cetera, have a lot of money. They have a lot of money that they can invest into AI and data science teams into their like operating platforms. Middle market and lower middle market funds have less. What recommendations do you make to them about how to approach a AI transformation or an AI strategy when they have limited resources? What have you learned from working with them and the work you do too?
So I really think they need to be very, very surgical. Like you mentioned, those big companies throw hundreds of, build teams, 10, 20, 30, 40, 50, 100-person teams to do this stuff. Smaller funds need to be surgical in where they apply this technology rather than just throwing volume, you know, these big systems and uh, these big transformations, just throwing them at their organization. So when I say surgical, what do I mean? I mean, okay, let's take a step back. What are the workflows across your firm, whether it's fundraising, origination, due diligence, portfolio and fund management? what are the workflows within those different functions that are taking the most time unnecessarily, basically. They're taking longer than needed, or that are bottlenecks for moving your business forward. And that's going to depend on what stage that fund might be in the middle of a fundraise. And so they need to think more about their fundraising efficiency and automation, whereas another firm might be more actively deploying capital. And so they need to think about things in a different way. So mapping the workflows, understanding which steps of those workflows are taking so long, and then bringing in AI and other technology to, you know, eliminate some of those steps. And so that's how I would look at it, rather than just saying, "Hey, here's this. I found this cool new platform. Let's buy this platform," right? Because
Yeah.
that typically yields very poor results.
And we're going to walk through an example of how you've worked with a private credit client in a minute. But I was curious, do you have like a process or framework that you and Soul Labs run? Someone comes to you and we can use the case study to like kind of bring this to life. But for someone, kind of looking at doing this for the first time, what does the right process look like? I'm interested in applying AI to drive efficiency at my company. Where do I start and what do I do?
No, I appreciate that. I think the way we break things up is into four stages, right? Those four stages are align, blueprint, deliver, and expand. And so align before there's anything is signed, we need to align with that internal function that is responsible for these things. Okay, what are you guys' goals? Where are you at today? What are the big pain points? What are the big blockers for you? So that's like the first immediate thing. And if they have no idea about what to do, or if there is no internal function, then we need to start those discussions, right? Next step is blueprint. Let's build a blueprint for getting your firm where it needs to be in 6 months, in 12 months. Maybe we break it up into quarters. What are the different business functions that we need to bring transformation into? What do we want the end state to look like for the different teams that we have internally? So on and so forth. And so blueprint might include roadmap, evaluation of different software platforms, deciding, do I buy, do I build for each use case, right? Then from there, there's the initial delivery, right? So the blueprint might take, let's say, 1 to 2 months. Delivery might take 2 to 3 months for an initial delivering a solution, end-to-end solution for, a specific function, right? And here you actually show results, right? You see, whether it's increased deal capacity, increased, reduced time to putting together the quarterly reports, whether it's being able to reach a larger pool of LPs, whether it's, being able to screen a lot more deals, in the beginning of the origination cycle. Uh, you start to show results, and then from there, you want to replicate that success in other functions, so expanding the impact beyond that initial kind of starting point.
Time to value there is, it sounds like a handful of months. I would imagine that's a lot faster than what you could have done 2 years ago. How do you imagine that time to value to be improving over the next few years? Can you imagine like a world where a private equity firm is going to be able to work with you to assess a problem and like build a solution in the span of like a month or two, or is that infeasible for other reasons?
We do that, and we regularly deliver on those shorter timelines, especially for light automations, right? But when you're thinking about transforming how a whole function operates, it's really spending the extra time is worth it, right? But if you want to take a step back and say, we've identified all low hanging fruit, you know, we have a really low hanging one that is, minimally invasive that we want
Yeah.
to automate, that can be done in a matter of weeks. Absolutely.
Yeah. Let's walk through the case study. So you shared with me an example of a private credit client. What problem did they come to you with, and why was the issue so urgent?
Absolutely. So they came to us. They had looked at their portfolio management, underwriting and origination functions, and those functions were completely disjointed, and not just the systems that they were using, but and how the speed at which they could run processes through those different functions. And they needed to grow from the top down. There's a lot of pressure to grow. That means, you know, doing more doing more deals. And like I mentioned, they're on the credit side, so They do look at a lot of deals, but they need to do more deals. They need to do better deals. They need to make sure that their returns are where they need to be. And they recognize that, hey, like, we have a good team. We don't want to take a bunch of time and a bunch of money to go and double our team size, right? Let's look at how we can systematize our operations so that we run more efficiently and so we can scale up our operations effectively. And so it was really, they were looking for someone to enable them to grow from a systems perspective. And so
Yeah.
that was the starting point with them.
Yeah. And so when you looked under the hood, what were the biggest friction points or inefficiencies, blockers toward that growth that you diagnosed?
Yeah, of course. I think the big thing was that there was nothing bridging pre-close to post-close systems, and there were no systems to begin with. In all honesty, I basically Excel and SharePoint were their systems, right? Like, how do we run a deal? Okay, well, we have some SharePoint folder, and we just throw in all the files that we have there, and we have some checklist that we go through on Excel, you know, to run, and that was it, right? So I think centralizing information from a bunch of different files and versions, from a bunch of different documents into one platform. So centralization of information, one. Two, once that information is centralized, like I mentioned before, steps to you can look at different steps to automate parts of those workflows, right? So extracting information from a SIM, that can be automated. Creating a deal memo. Today it was just being manually created in PowerPoint. That can be automated. Creating one pagers on opportunities to share internally, or even one pagers on different accounts to share internally. That can be automated. That's on the more due diligence and origination side. On the portfolio side, none of that information was actually making it into the portfolio management system on a good timeline. People would just manually key information over, copy paste information over um, into their portfolio monitoring tool, and that caused a ton of issues. Reporting was regularly delayed, several days each quarter, and LPs, that could sometimes cause problems with LPs. Right. So both for the internal and external purposes, there was a lot of automation, to do there.
And in terms of the solution, tell us a little bit about what you designed. How much of it was custom built? How much of it was leveraging existing tools? How did you manage sort of the integration to put all the pieces together? Tell us a little bit about that solution.
Absolutely. So they were using iLevel as their portfolio monitoring tool. They were using Dynamics as their CRM, and we built an underwriting system for them, a custom underwriting system for them. We connected that system to their SharePoint instance, to iLevel, their portfolio monitoring tool, to their CRM, so on and so forth. And that backbone, and we basically built the backbone of that underwriting system was communicating with all those systems, and so you had a single source of truth for your data. Data was always in sync across all the different systems, and that was we kept our existing systems, and we built a custom system where they didn't have one. So that's what we did there from a systems perspective.
And what trade-offs or design decisions did you have to make to get to a system that actually worked? Were there things that you turned away from or recommendations that you didn't accept to make sure that this worked?
I think one of the biggest things is the standardization of the processes. So, in order to systematize a process, you need to standardize it first, right? And so, when you when you're dealing with a situation where people have different ways of doing things, like different MDs might have different ways of running their deals. The MDs need to come together and talk to the technology side and agree on one unified way. This is how we want to run deals at this firm. Or hey, for these specific scenarios, we run deals differently in these ways. But really agreeing internally on how you want to standardize your processes is the first step here. And so that's the biggest trade-off is like, okay, we could build custom process logic all across the board to suit everyone's needs, but that's not scalable. You need to have some level of unity. And so that's the trade-off is like how wide do you build the system versus how standardized and narrow do you build it?
If people were doing things differently before, you build a solution that is standardized, how do you ensure that those people are going to use this effectively? What's the sort of change management like work here to convince those MDs that like, yeah, you did this way in the past, but in the future we're going to do it this way?
Part of that is co-designing it with them, right? So it's not giving them something standardized for them to execute. It's okay, guys, we need to come to a common understanding of how we want to run this process. Let's co-design this system together, just from a user experience perspective, right? So there are no surprises. So it's bringing them in to co-design the system and getting the executive leadership to help with that, co-design. Be like, yes, like we need to standardize. That's going to enable us to scale. So bringing them in early and having them, design it really and give us and give their colleagues, their thoughts and their needs is super important.
And what did the after state look like? We'd spoken about an increase in deal capacity, presumably a decline related in the amount of time people were doing some of these things. Tell me a little bit about how much time was saved and how much capacity was increased and what this could unlock for them.
Absolutely. So if you look at, the underwriting process has several stages, right? You might have an initial screening, you might have a refined screening, you might have, you know, an IC memo, you might have other documents and in that kind of sequential process. A really good way to measure how long the process is taking is like, well, at each stage, how long does it take to come up with that final memo or that final document for each stage? That time on average went down by 70%, right? So for me, that's the big indicator that this team is running much faster. They told us, hey, we're able to look at a lot more deals and we're able to reach decisions on deals a lot faster. We can look at 50% more deals and actually not look, execute on 50% more deals. So speed to conviction is super important. And I think all these different metrics triangulate around enabling speed to conviction.
Anything you do differently next time? Any learnings from
Yes,
this that can be applied
absolutely.
in the future?
Absolutely. So I think um, in the beginning, the we kind of worked with the internal person driving this project forward to standardize, and then we go and we kind of present that to different parties internally. I feel like the more you can bring them in, even from the even to the initial discussions, the better, right? So, co-designing, co-partnering, even before that, right? It's like you want to bring them in and have them feel ownership over this. So it's just bringing in subject matter experts as early as you can into the process is extremely helpful to make sure everyone has buy-in.
Awesome. As we come to a close, I'd love to ask you some recommendation and lesson related questions. Maybe we could start with misconceptions. We spoke about myths early on, or I mentioned myths early on. What's a misconception firms still have when they think AI will fix this?
They're thinking in terms of platforms, not in terms of workflows. So they look, advertisers are great. Advertisers are reaching these people, and they're like, oh well, heard about this platform. I heard about that platform. We should implement this. Like, but like that's not a that's a very you're not reverse engineering the problem to reach a solution. You're bringing in a solution and trying to ram it into your problem, right? So really look at the workflows, the business functions, what's taking a lot of time, what's the bottleneck for the business, and then come back and reverse that into the solution that we needs to be implemented. So that's a very common misconception that I see.
Right. You've seen a lot of firms try and fail to AIify their operation. What's the number one reason projects get stuck between vision?
The number one reason projects get stuck is that the technical plan was wrong. I think from the beginning, they might identify a problem, which is great, but actually building the technical plan to solve that problem in the context of all the other systems that exist at the firm is typically not done very well, right? So you might build a system, but it doesn't work well with everything else that you have. And so no data populates it. And so there's very low adoption. You might bring in or build a system that doesn't map well with all the different processes that are existing at the firm, like we said, because there wasn't that standardization layer, right? So it goes wrong at the planning phase, right? Before you even get to the execution phase.
Yeah. How do you help skeptical teams move from "this sounds cool" to "this works for me"?
I think that the key question is, okay, it sounds cool. What is the business impact we're looking for here, right? Like, what are we actually trying to achieve from a business perspective? And that makes them actually think, okay, well, let's look at our business functions, let's look at our processes, because the results of whatever metric you use is a result of however a process is run. And so tying it back to business impact is super important because everything is cool and interesting in isolation, but it doesn't matter if it's cool and interesting. It matters if it actually drives the business forward. And if it does, then that actually is the first step to understanding the problem and laying out a technical solution to solve it.
Awesome. Osman, that's a great place to end. I really appreciate you coming by. Just curious.
Thank you so much, too. Thank you.